This is not a discount, guys, at all. Discount is up here. So I'm going to target a 1 to 2. But my main goal for this trade, I don't think I'm going to fully exit. I'm going to exit enough to where it's a 1-to-1 trade. My full goal for this trade is not only to break this, but to break this low right here. That would be ideal. But technically, all it really, it could break straight up right here. We are not in a discounted zone. The discounted zone's up here. What's kind of convincing me of this move per se is because this is a order block. We can move down. So at least should see some sort of movement to the downside here. That's my hope, at least. This is on MNQ, by the way. NASDAQ, 100 tick time frame, 1,000 tick time frame, sorry. So there's a lot of, this is going to be a longer trade. What's going to end up happening tonight for everyone watching is I might leave the stream up, leave the trade up, let it run, depending on how long it takes. This shouldn't take more than 10 minutes, but just kind of leave everything up. Not going to really engage tonight. I'm not feeling great, but I wanted to go ahead and live stream this to show people this specific trade, since this one is a very clear-cut kind of strategy trade for me. If we look at this on the 5,000 tick, we're rejecting a lot over here. We did open with a new candle. I expect this to come back up and kind of take me out of profit right here. Oh, I didn't mean to enter with this trade right here. I did not mean to enter with this trade right there. Let me go and close this one. I didn't mean to enter that. You can see I was trying something that someone recommended to me. Trying to pass the accounts in 2 trades. It didn't work out well for me, so I bought like 3 accounts, I think 3 or 4. Did not end up working. I'm increasing my risks though. I have not been trading according to my strategy recently. I fell out of habit, either sickness or what, but we see this move coming down right here. Hopefully we could see price come hit this, take profit. It's my ultimate goal. Again, I expect that this doesn't continue all the way down, especially since we're coming back into previous structure here. I don't really expect this to come straight down here. I expect it to hesitate a lot more. But like I said, at a 1 to 2 entry right here, because this is whatever amount that is. Oh, maybe we might at least come down to this liquidity area right here. So this is a fresh account. I need to slow down. I'll be completely honest, everyone watching, this has not been I'm having a difficult time right now. Today's market really frustrated me and I did tilt after getting off. We'll see if I can improve. That is a liquidity grab right here. Let's see. We never reached 400. I do want to see 400 in profit here before I take any partials. If it hits that 400, let me see, where is 400 exactly? 400's right below it. Okay. That 1 to 2. I can close 2 contracts. What I might do is I'm targeting a lot farther move. So I might close what is this? 812, 4 times my risk. Getting 1 time. I close at $100. I get $200. I'm guaranteed 100 here. If this comes down to this 400. And then I'm gonna let the rest move, I think. And I'm going to keep this at this high up here. It's actually lower than where that take profit is. I want to see this just, come on, give me one more retest at the bottom so I can exit the trade feeling fine. But this was a good trade entry, so we'll see if this continues down. I had to reset myself. I really had to reset myself. Hey, what's up, man? How's it going, Eiffel Tower? How are you doing today? Sorry, it's a little bit quiet. I'm not feeling great right now. I'm feeling pretty sick. So I'm not able to talk that much. Oh, this is technically I've already gotten a 1 to 2 risk reward here, but my main goal is I'm gonna trail. Actually, I need to play this safe, don't I, for this account? Hey, which model do I trade? So I am a scalper. I trade on the 100 tick, which accounts for liquidity differences during the multiple time frames. My model that works, I mean, my model that I tried to trade and stick by, which I haven't been doing successfully recently out of pure honesty, my streams have been fine. That's a little bit gross. My streams have been fine. Okay, let me trail down quickly. Sorry, let me focus 1 second. I'm gonna go ahead and exit. What was
order
5
filled
contracts and let the rest trail. So this is my second take profit. I might just move this up a little bit. I'm gonna move this right here and then have just a better kind of risk reward here. That's 95. Sorry, now I'm good. So my strategy is, if you look at this doesn't really do it justice. All it is looking at the higher time frame of a move, and I'm looking for a continuation. We can see that this is extremely bearish move right here. So it's a move to the downside. And all I'm looking for is a continuation of that move from a discounted area. I've already seen all of this area kind of fill. And I saw this little gap right here that just kind of piqued my interest. So I went ahead and took a trade off that. I trade on the 100 tick. So typically you'll see me on the 500 or the 100, which you can't see on the screen up here. This trade entry was based off the higher just because the liquidity is slower. So this trade entry was based off of the 1,000 tick. But typically my higher time frame's 5,000, my lower time frame's 500, or my higher time frame's 2,000 tick and 100. The 100 tick on London session is kind of similar to the 1 minute time frame. So it looks very similar. But the difference between ticks is you see each individual movement that we have right here. Give me 1 second. All right, there you go. Sorry, I don't want to see that in my chat, especially if there's anyone that's underage around, man. Sorry. I'll set a timer for you. So basically the strategy itself is just continuation of the trend on the higher time frame. You're looking for discounted areas. You can see these gray boxes I have right here. These are discounted areas. So all it is kind of if you know what a Fibonacci is, or even if you draw a line, it's just anything above a 50%. And even better, my trade entry, anything above 35% of the move. So all that means is if you look at this whole structure right here, the top 35% of market structure are the previous high and low that was shown is what I'm looking for. And then I'm looking for somewhere that it can reject. Okay. And we can see that we have a rejection area right here. If it decides this doesn't want to hold it, then, it's going to go somewhere up here. But this was the best area I could see for a rejection. And then I look at some structure to form. Now, since this is already moving so bearish and we consolidated forever within the structure, so then I wait for a break. And then with the candle that breaks, I look for strength. I look for a gap to form. You can see this gap where wicks don't touch. And then I look for a candle body, not the wicks, a body to close below that gap. And usually I just look for a 1 to 2 trade. This one gave me a lot more insight that we can move down further. So I'm taking this trade a lot further than a 1 to 2. So that's why I close partials. It's just to account for what if I lose on this trade. That way I get something here on this trade. And then if it comes down to here, or maybe I might target down to here, if it comes down all the way, then it will be a 1 to 4 trade. So that's kind of my idea here, or sorry, 1 to 3 trade. So either I get a 0.5 of my original risk, which was $200, or I get 4 times my risk, which is worth the risk amount for me right now. But all my strategy is inverse fair value gaps. You could look up videos of that. And then the discount structure of a trend. So just having a buy at higher time frame bias and only taking those inverse fair value gaps based off the higher time frame bias. For example, if I was looking at this is looking very bearish. So I might look for an entry off of that bearish move. And sometimes you might see an entry occur right here, which it didn't this time, but you might see some sort of structure like this, and you might see a fair value gap like come above here and then form that gap and break down. I know that's very confusing. The best way I can explain is you're just looking for wicks to not touch. And those wicks need to not touch on a candle body. So a body is the thick part, a candle body that's breaking some sort of structure. And if we follow this market structure right here, we have this previous high internal structure, high and low. We broke above that right here. And then we broke above it again right here. And that's what I'm kind of targeting, is I'm hoping that this is going to be finally the move that breaks all the way down here and continues its trend downwards. It doesn't look like it is. It looks like it's going to hold this trend and potentially stop me out currently. So, but that's the idea, is I'm hoping that it takes 3 times. Yeah, dude, I go watch the stream earlier and see how irritated I was. I should have just not even started my stream when I saw that market structure. I typically only try to trade like an hour max. And my time slots do differentiate, which is why I use the tick time frame, because the ticks, each one of these ticks, it can take 3-4 minutes for a candle to move, or it could take 30 seconds depending on the liquidity, but each tick kind of shows a similar size, and it's very easy for me to predict of where the market's going to go based off the trend. But this earlier, this made me want to lose my mind. I was trying to trade during this today. Oh wait, no, where is it at? Oh, wow, when did it spike? This is what I was stuck with all today. Now, tilting is not the right word, but this was just not fun. It's not good market structure. I mean, we are generally overall bullish. My expectation is potentially we are going to come a little bit lower to grab liquidity one more time, is my guess, because this was not a convincing grab for me. Where it grabs this one candle wick, that's not convincing for me enough to move higher. And so my belief is that we are going to come down and grab this liquidity. That's why I'm keeping this very close. This take profit very close down here for my desired take profit. I don't know if it's going to reach all the way there. This is kind of where I'm going to trail my take profit at with the rest of the contracts, but I'm guaranteed to make money on this trade just because the market's so volatile and I don't really want to take this risk. I'll be honest, I recovered this other account. If the market moves aggressively, the main thing is do not counter trend trade. And what I mean by that is if the market's showing you something, you have to have structure that matches. So for example, if I'm trading on a structure, and I'm going to do this in percent and multiplication, okay? If I'm trading on a structure that's 50 times my lower time frame, it's not going to really matter looking at all of this, right? All of this does not matter. realistically, anything 50 times my time frame, I should only be trading in like the past 10 candlesticks, right? If it's 20 times my time frame, which is where 200 ticks is, like if it's my main time frame, then maybe I might scroll out a little bit more and look at the structure. But realistically, you can get a trade just based off the last 3 to 4 candlesticks, especially if it's showing you a convincing move. For example, you know, what do we see over here to the left? Well, we see this big, massive sell-off. Oh, let me see. We saw this big, massive sell-off. And maybe we came in where it grabbed this liquidity right here. And I bet you on the lower time frame, it actually gave me my setup. Yeah, I did. Lower time frame gave me my specific setup. So all I do here, this is my setup. You can see where these wicks don't tap. This strong candle broke above this previous high, and then you had a sell-off. And all it is just following the general higher time frame trend, having a market, a structural area where you think most likely it's going to hit. And a lot of times you could see that by areas that haven't retested. And you can see all this structure right here has had some sort of higher or low until this point right here, where this was not really a convincing high and low. And so then you had this pull up right here where it did give us a convincing high and low, right? And so this is the last time we had a convincing high or low. And then this is the first time it's retested back up into this higher low. So that's the structure I'm looking at. To fill, it's just basically balancing things out. If you think of a seesaw, that's the best explanation I can give for it. You think of a seesaw, how are you going to balance out these trades? And so that's my idea with this trade here. So if I'm thinking of a seesaw, you know, what's unretested on the seesaw, which we might pull up more because there is actually a little bit more unretested on the seesaw. We have a little gap right here, if you could see. So that's why I went ahead and closed some contracts, just hoping that this would move lower. It might not. But if we looked at that, then we can scroll down to the lower time frame and let's see what's actually unretested here. Well, the structure, if we pull all the way here, we do have something unretested up here, right? This has yet to be tapped. And then the next structure where I haven't seen a tap again is right here, right? So these are the two structures that you would look at for a trade to the downside until you see some sort of change of structure on the higher time frame or some sort of impulsive move, which we haven't gotten yet. Does that make sense? It's very hard for me to explain it in layman's terms because there's specific vocabulary that, and maybe you've traded for a longer time. I don't know. But all I recommend is if it looks confusing like this, ignore it, or you can go to a lower time frame, or if it's confusing on the lower time frame, you can go to a higher time frame and you can risk the same amount you would do on either time frame. It just might be longer trades, but there's certain time frames people are more comfortable with out of boredom. For example, I trade on the 100 tick, 500 tick, especially during London because it moves in 10 seconds, 20 seconds, and it doesn't give me gaps. Which I hate. I hate when it's not clean market, clean candles. So, but you know, we might see this trade work out. This recording is going to be forever. I don't know how I'm going to speed this up for a short. I need to make this less confusing as well. Let me go ahead and delete this. But hopefully that makes sense. Hopefully that helps a little bit for you. We'll see if this thing continues down. I doubt it. We've failed to make a lower low here. So this will most likely continue up and stop me out. Oh, I'm not even showing the screen. But hopefully that helps out. This is the only trade I have for the day, to be honest. And I would be more inclined to believe that this would work out by grabbing this next structure up here, and showing the same exact setup I'm looking for, just because it has a higher likelihood. But, you know, maybe this might work out. There's a chance. So that's all I'm hoping is with this chance, because I already took partials at my normal take profit level, which was down here, that the chances it would come and fill all the way down to here, which is probably going to be my new take profit level. I don't see any reason to exit earlier. Let me see, 1 to 3. I might go for a 1 to. There's no point in doing a 1 to 3 because there's no point in trailing this anymore. That would have just been my original exit area. We'll do a 1 to 4 though. Played a little bit safe. I don't think it's going to hit that though. I had hope. My hope was going to be diminished. Broken hope. I know it's a little bit boring. Again, my throat is, I'm just not feeling that great. So, I'm not able to talk that much for you. Yeah, this works. This works a lot. I mean, if you trade it consistently, it's like any other kind of trending strategy. But you can even trade it in these markets if you're really good. You just have to have a lower, shorter bias. I mean, like, this gives a lot. I have a short that gives a link to the Google Doc that I use to track my trades. One of the Google Docs I use to track my trades. But all it is I'm just taking the higher time frame. I'm looking for a discounted area. Like, this is technically not a discounted area. I understand that, and there's a high likelihood this will continue up. But all it is looking for this trade, and then looking at anywhere it's discount. And if I'm looking at this, you know, we did create a lower low here, discount somewhere up here probably, and then I could have looked for a trade set up here to continue lower. When you're inside structure, here's the difference with my trading strategy. When I'm in structure, I wait for confirmation. Yeah, you'll make it. I'm gonna say this, I don't like ICT. It's too complicated. If you've seen ICT videos or stuff like that, I've traded ICT before. It's too complicated, and that doesn't mean people don't succeed at it. It's, again, ideas, but it's all recycled concepts at the end of the day. But it's just, in general, too complicated for what you need to actually be good at trading. The main thing is just consistently risking. So if I choose a risk on a funded account, stick to the risk, stick to the take profit. I mean, I'm on Top Step doing a challenge. If I decide one trade, it's like going to a casino. If I decide to put it all on black, and then I'll put 100 on black and then put it all on black the next time, right? Well, the odds, that first $100 does not matter, right? But if I consistently put it all on black, and I know black's going to win over time because of a magic ball or something, or because I've seen the statistics of it, then if I keep on putting 100 on black, you know, yeah, it's going to be slow, but it's going to continue go up. And that's the biggest key. And the nice thing is, when I'm risking the same amount each time, I don't know if you see any of my streams, I do the same strategy. The strategy is not my issue. Think of it also, I want you, anything your strategy is, always make sure that you're in the higher time frame bias. So hopefully, let me know if my language doesn't make any sense to you. Yeah, it's nice to meet you. Thanks for joining in. I wish this was something. Actually, no, I would kind of go crazy if I was doing this whole time. I do like my stream setup though. I had fun making that. But in this, I'm not even relying on this. My main goal is, I'm finishing my doctoral degree in psychology in about a year, so that's my main goal. After I graduate, this is just side interest, side hobby that I've been doing for 7 years. But you have a higher time frame bias. So let's say I'm not gonna do that over stream, but I do have a Discord if you want to talk sometime. I think it's linked. I don't know if my channel is still active, but I think my Discord's linked. But I'm happy to talk. No money required or anything like that. I don't mind doing that one time. It's just whenever I do have availability, it'll probably be briefer. But or what I can do if you give me an email, I can email you some pictures of the strategies with the rules, and that might actually help you better. And then you can just plug it into AI if you want. Just take screenshots of the trades that you're trying to mimic. The most important thing with my strategy is do not trade against the trend, the higher time frame trend, and your higher time frame trend should never be 20 times more than your lower time frame. So if I'm on the 1 minute, yeah, if you want to, is there a direct messaging? I don't want you to post your email on. Please don't post an email on chat. If you don't have Discord, let me see. Let me see if there's a direct messaging. I don't mess with YouTube in that way, so let's see. Oh, my short got a lot of views. That's not the short I wanted to get views. Let me see. Is there direct messaging on TikTok? If you have TikTok, I think there is. I don't use it that frequently, but at least I can give you some screenshots. Or what I'll do, TikTok. Let me see. Is there direct? There is. Oh, there is. Yeah. If you want to go to the TikTok and you want to direct message me, you can do that. My TikTok's linked on my YouTube, and I'll send you some photos with a better explanation with specific rules to follow on it. And then I'll send you some screenshots of trades I've taken to give you some ideas. There's it should be exactly it's listed on my YouTube itself. I don't actually know my ID for it. Give me 1 second. Yeah, let me see if I could get it up for you. Here you go. There you go. There's my link for it. I'll send you some screenshots. Some of the trades. A lot of the trades are ones I've taken recently, and I'll send you the rules for the trades. But a lot of it does come with intuition, so just knowledge, kind of already applied knowledge. My entry is a very easy entry, though, which is nice. If I'm looking at this structure, hey, how's it going? If I'm looking at this structure, it's not the best structure for my specific strategy, which is it's still trend focused. So what I want to see particularly is these types of setups. Either A, back within structure, it forms these little highs, high and discount. So discount again is anything with this Fibonacci. Let me see if you could see. So discount's anything with this Fibonacci zone. So as you can see, my Fibonacci is 0.45 or lower. And 0.35 to 0.2 is my sweet spot for my entries. And so I look for a kind of a fake out, move downwards, which is usually the first attempt to move downwards. It comes higher and then it shows that setup. So you want to make sure you have a clear higher time frame that shows that, and then you have a setup similar to what I show right here, where you can follow this high. This is not the best clean setup, but you could follow kind of this market structure with inside, and you have this high, and then you have that setup right here, right? And you can see where that FVG is, that inverse fair value gap is. And so then I have a bias already that I moved down. Technically, I would be out of this trade if I was just targeting my typical 1 to 2 trade. Okay. Let me show you why. Because my original entry was here. My stop loss is there. And then my target did hit the 1 to 2, and I did exit partials right here. Sorry. But yeah, that's one of my strategies. That's the easiest one to replicate. You want to trade it on, realistically, if you don't want to be sitting on the market forever, you want to be trading on the 1 minute with this strategy, or the tick time frame, 500 tick. But you have to be very quick at identifying your higher and lower time frame. If you do that, this is coming up and this will stop me out, which is fine because maybe it won't. Might give me another entry. And let's see how this reacts here. It may give me another entry. I doubt it will, but it might. So let me show you why. This is another entry to help you out. We have that general bias where I entered the trade. We have this candle that broke up above some sort of, liquidity right here. We have a gap right here. And it failed. Okay, so no, it won't. It's going to stop me out. That's sad. Well, maybe it won't. I don't know how to read that right there. It's not part of my strategy. No, it stopped me out. Which is fine. I got $100 off this trade. There's no way. If this thing survives by 1 tick, if this thing comes all the way down from 1 pip, I would be very surprised. I might exit at break even, I'm going to be honest at this point. If it comes back down to break even. I've never seen something survive by 1 tick right here. Ever. Without being stopped out. But hey, maybe it's the first trade ever out of the 1,000 trades I've taken with this strategy. Let me see. Let me know if you do send it with the TikTok. I probably will exit this if it comes down. What time is it? 11:20. I want you guys, whoever joins in again, I want anyone to hold me accountable if I start risking more. Unless I say specifically I'm going to double my risk for this one trade. There I am. I'm getting stopped out now. Hold me accountable if I start double risking. My risk is going to be $200 for this account. I need to get some consistency on my risk management. I've set a strategy aside, and my strategy works really well. When I'm consistent by it, I was holding a 68% win rate with that strategy, doing it following by the rule book for a solid 2 weeks, and then I started going off the deep end again. I've been profitable with it for several months, and then several weeks and several months, and then I just have bad weeks, I guess. Still struggling with some beginner stuff. Let's see what this decides to do. I really just want to see it come back down to break even, but I don't think it is. I could save some money here.
Order filled.
Yeah, I'm stopped out. That's fine. It's tough. It is a very tough thing. Like it's very, very difficult to trade well. Don't feel bad. Like a lot of those people that you see online are not real traders, and they won't admit when they lose. And you'll see it a lot of times in my streams. When I lose, I'm still not great at coping with it or dealing with it unless I know I've. A lot of it is mostly my consistency. If I feel like I'm being consistent, and even if I lose, I feel amazing because I know I'm sticking to the strategy. But then when I go on these rants or tears, because I start, you get greedy or things like that, then it kills you. It really does. And everyone deals with that. I've just been dealing with it longer than all my friends that I started trading with. None of them in person, by the way. This is a group I found a long time ago. A lot of them I say multi, but like have made $2 million off trading. But they found a strategy right away. One guy uses AI, uses the algorithm trading, a bot that he built, and it works really well. I don't know where he's at yet now, but he was starting to make money then, and I remember he was posting videos. So if we follow this, let me show you. Let me go ahead and stop that recording that I probably won't use because I was switching around. With those shorts, I like to make sure that it's showing on the same screen. And I like them to be quicker trades if it's a win or loss because it's easier to shorten it down to like a 20-second video or a 30-second video. And I like them to be clean setups as well because it's more educational. I'm from the US. I'm in the USA. So this is what I mean by discount level. Now, the issue with these types of trades is if we look at it. Yeah, thank you. Appreciate it. And it's very great right now. But okay, cool. So yeah, you're definitely trying to. I get a lot of people from like Iraq, Pakistan. I've had a few from Saudi Arabia. I've had a few from the Qatar in here. Most of the people I have are from, because of my trading times, are from generally Europe or the Middle East or what else? Europe, Middle East, or Asia. I don't have a lot of my viewership, my USA viewership is low. It's like 5% or 8%. Which isn't saying much. I don't have a lot of people that watch. My shorts get a lot of views, but again, I don't even care about views at the end of the day if I don't like how I design my shorts. The only thing I've been proud of this channel is my general stream, my live stream. How I've designed this. So this is what I mean by we have a discount area right here. And remember that gap that I said forms frequently? The only worry I have here is so this is technically the gap that formed, right? We grabbed another liquidity. We have a inverse fair value gap. This one is in discount. So if this does close below this wick, realistically, I want to see this very quickly close below this candle, where we see that close below this candle. And then all the strategy is taking a short position, preferably looking for a small retest back in somewhere in this gap, anywhere in this gap. And then putting your stop above the high. And then all I do is target 2 times what I'm risking. Now, the risk of this, so I know we saw this recently. If we do even scroll out further, this is the main risk of this trading strategy. Yeah, just message me. Hopefully I'll help out as much as I can. Again, focus on consistency before you try to go for profits. And what I'm going to say that is there's 4 things to being consistent. Risk amount. Start out with a consistent risk, okay? So that's going to be $200, $300, $100, depending. And if it's a funded account, use funded accounts first. If you want to actually risk money, use funded accounts. Purely risk small amounts on those funded accounts, because funded accounts have challenges that try to destroy you, and read the account challenge rules. Or if you're risking your own money, please be careful and please be safe and risk one contract at a time, or whatever you're trading, risk the smallest amount you possibly can until you get some consistency. Then there's higher time frame. I use Top Step. It's just the most verified. There's a few verified ones like My Funded Futures. Now, this is futures, by the way. This is not stocks. I know you said you were newer, so this is not stocks. This is futures. This is not gambling. This is boring. Let me say that. If you start to have fun doing it after you've learned all the information you have to, you're doing it wrong. That's the best way. It can make money very quick, or you can make money consistently and with very little effort. You just got to get used to the boredom. That's the key thing, is get used to being bored. This account's not funded. No, I withdrew money out of the past funded account I had, and then I lost the account. Like I said, my risk management wasn't there. I've had several. I've had probably 15 funded accounts. 4 or 5 I've withdrawn from different brokerages. I'm probably around break even after all this time, from when I started learning till now, maybe even still down a little bit. But when I initially started learning, I was talk about destroying accounts. I was destroying accounts. And when I say all this stuff, I still get in bad habits. Like you have to train yourself in a habit, just like brushing your teeth, just like going to the restroom, the bathroom, just like taking a shower, going to work. It needs to be a consistent habit that you hold yourself to. And you need to have specific rules for that habit, that if you break them, you punish yourself in some way. And it's just like training yourself with any sport, you have to have some sort of punishment or a way to improve. So I'm not necessarily going to say keep a journal, but definitely take a screenshot of every trade that you take and learn from your mistakes. Identify what was the factors, and if you can't, then you don't have a clean enough rule set, or you haven't practiced it enough. So if I'm not able to identify why my trade does not work out, for example, if I can't figure out, oh, why did this trade not work out, then I haven't studied enough, right? And now that I'm looking at this, we were never going to come down. Oh no, we could come down. I still think we're going to come down. But yeah, it's not that I believe in the strategy wholeheartedly. It changes. A lot of my live streams are for people to watch back too. It's just really whenever I'm available. My education takes priority right now. My clinical psychology. That's my main priority right now, is to finish that up, get my doctoral, and start with my doctorate internship. But a lot of times it's going to be later in the afternoon. It's going to be somewhere between 11 and 1 o'clock p.m. Tomorrow it's going to be probably around 11:30 a.m. 11:15, 11:30 a.m. is when I'm going to go live. By tomorrow, I mean today. Um, I don't leave. I think by your question, I don't. I won't ever leave. I think it's something I put so much time, invested so much time into this. So trading wise, 11, no, that's when I start my stream. 11 a.m., 1 p.m. That's New York East. I don't know what time that is for you. That's New York session time, is when I would go live for those. But in terms of like actual trading interest, I won't ever leave trading. I enjoy it way too much, even though it is very boring. Um, I struggle with keeping a consistent schedule with live streaming, but I'm trying to do that more so and eventually go into shorts, because I like education and I like talking with people who are interested in the same thing. We're showing strength here. Don't like that. Oh, I really don't like this setup. I don't think I'm going to get any other trades for the day. Surprisingly, I need to pass these 2 counts. Otherwise, I am going to take a break because I have not been trading well. I will have to take a break and then just start trading. And I won't be streaming those. So I need to make sure I'm extremely consistent. I'm putting a lot of stress on myself, but I'm kind of tired of trading really well for multiple weeks and destroying it all in a day. And that's been a huge issue for the past like 4 months because of stress and a lot of other factors I'm not going to go into. But in general, I still enjoy trading a lot. Like, don't get me wrong, I really do enjoy trading a lot. I'm worn out by my decision making with it in terms of my poor decisions on trading. Let's see what this does. This might show me a small little setup on the 100 tick. We're in a discounted area. Let's see if we could get an instant rejection here, or if we're going to continue up. Looks like we're going to continue and break straight through. Give me 1 second. Sorry, I had to close that for a second. So we're still technically, even though I don't like how this is coming up, we're still technically bearish. We're still technically moving down here. We have yet to break the high. But the moment we break this high, our bias shifts to being bullish. Now, I really don't want to take this without confirmation. So take a trade to the downside without some sort of confirmation. So what confirmation would look like with this specific strategy is looking for a close below this area, like this, something where it comes like this. Coming back above, retesting, doing whatever it wants, and closing back below the gap again. And that's the confirmation for this specific strategy. So we'll see if it gives me that specific setup. I'm only going to target a 1 to 2 since we're showing such a strong move. And then I'll probably call my stream here. And this is a part of a kind of another confluence. We can see that we have this huge wick right here that we are unable to break above currently. So what you'll see on this next candle is you'll see some sort of move up higher, and then hopefully we'll see a move lower right here on that rejection. So let's see how this reacts here. You want to see it not hold, which I think that's what it's doing. It's holding this move. Again, an ideal setup would usually be within 3 to 4 candles. The same exact strategy coming out. Okay, so we're going to get the close below, hopefully. This gap. Okay, we got the close below. So I want to see a retest back in the structure and then a failure back down before we break this liquidity. So all it is coming back up to this gap. And if I want to get a bigger, better risk to reward, I could enter like 1/3 position sizing to count for the fact that I'm entering at a lower area there if you really wanted to, if that's part of it. But for me, I don't. I just wait for the confirmation that we're moving lower. So I wait for a pull back above the box right here, and then a break back below the box is my confirmation, which we pulled above it. So let's wait for a break below it. I think this might be a setup on the, yeah, it is a setup on the lower time frame. I mean, the higher time frame as well. Or maybe even just a bearish engulfing candle here would be good enough. So that's just a stronger red candle than a green candle. And that's all I'd look for. Oh man, I'm not feeling good at all. Sorry. I'm feeling really bad. We break above, and we failed to move higher. I mean, we failed to move lower from there. So technically, we're still within the range of, you still could see a setup here. Technically, you could still see a setup here, but now it's changed the, and it looks like actually a way better risk to reward if it shows the setup right here, which is what you would want to see. Now, I don't think this is necessarily a great entry. And the reason why is you don't really have anything, any structure right here holding it. So, and it failed to break lower. So this might actually break the top. This might actually be a good inverse trade where you look for an entry down here. You put your stop loss one candle lower, and then you target a 1 to 2. But I wouldn't ever, I'm not going to ever recommend that. But that's if you know, if it holds this area without failing, which it did here, that's generally a good counter trade. Yeah, it can reject from here. It could reject from that liquidity. Most of the time it won't. Most of the time it'll come straight and grab this liquidity up here, this line that I have. So that's why I'm saying if you see this and you see it hold this gap, that means, hey, you can take it as you can put your stop loss close if you want to, target a 1 to 2, or target that liquidity. If you really feel that confident with it, you could target at a candle below, you could target the gap below. It's really whatever you want to play for this rejection play. And you could target a 1 to 2, and that works as well. It's the same exact setup. It's just continuation of the trend, especially if it doesn't show you the confirmation you want. And there's bias both directions, which we do have. We do have bias to the top side, so that would be a valid setup. This would technically work as a setup to the top side. I just won't enter that. I forgot. That's all it is. Yeah, there's that, and that would stop you out. So like same thing as looking at the higher time frame bias, right? I want you, can you identify one mistake I was making right there? I want to see, and it's something I have to reflect on right afterwards. What's one mistake that I made? I didn't actually take that trade. So you'll see it up here. You'll see in the top left, up here, if I take that trade. I didn't actually take that trade. I was just taking, it was an example trade. So why would I take this? Like the reason this would work out, I would have taken this trade if I could. So what the mistake I made is I was so focused on a bearish trade, right? I was so focused on a trade that's going to move to the downside, taking a sell, right? That I neglected entries moving upwards. So that's my mistake I had here. So yes, I didn't technically have any entries moving up right here. If I look at the 100 tick, I didn't see any entries. I mean, if you trade that type. But what I did see in terms of entries is I saw, okay, this is the first entry I have. We're showing this amount of, showing this much strength up here. And we're showing such a, bullish move where we can move upwards. Why? And we're holding this gap that I'm looking for a trade to the downside. We're holding it not only once, but twice. So why don't I take a trade right here, targeting a 1 to 2 or something like that, or target it entering right here when we already held this area, right? Since we've already filled this whole gap. And yes, that would technically work as an entry because we have such a strong move to the top side, right? We were moving so quickly, and that's the difference. Yeah, and I want you to look at this. Is usually that's not an entry what I'm showing you, especially in this structure right here, but look at how quickly we were moving towards that. We have one big candle, we have two big candles. So I mean, technically it would be a valid entry to look for the inverse, the opposite side of what I was trying to actually aim for. This could be a buy side, yeah. This technically is a setup. Yeah, it's a setup right there. And this is what I'm saying is now we're moving so, bullish. We can look at the discount right here. We have such a trade to the long side. We hit the discount zone, and then what we see is we're looking at market structure, right? I mean, technically we have a gap right here, but we also have a gap right here grabbing both liquidity, and we filled both those gaps. So yeah, technically this is an entry. The only worry you would have with this specific trade is there's nothing holding this area up, right? I don't see anything holding this area up on this left side. You don't see any structure that's formed or left. So what you could wait for is you could wait for it to come down into here and that's still within this. So maybe I might target somewhere within the zone. And then now I can look for the setup right here. Set up somewhere right here for the same exact entry. Because this is going to fail. And the only reason I know this is going to fail with that move is because we have nothing holding it up to the left over here. Like, this is just clean structure. You don't want to see clean structure when you're looking for rejection. Now, this is an entry if this gives me a setup. This is a solid, solid, solid entry. If this gives me a setup right here, I see that closure above this. It's a solid entry if it works. If it doesn't, we didn't close above it. This body did not close above this gap. You actually see it rejecting. So what I can assume now, since we're rejecting, we're coming down for this liquidity. And that would be an assumption of mine. Or we might see another setup right here. And I haven't entered it yet because it hasn't given me that confirmation, right? Now, same exact issues that we're having on this left side over here, right? If that gives me the setup, I don't want to enter because if we ugly market structure is at these wicks. I don't want to see it when it's already broken above those bodies, at least for my own strategy. So we can see the only thing holding this thing up here is this wick. Like we've already closed down. And so that's how I know that this is going to reject, most likely coming down for that liquidity right there. And you could see it rejected, it grabbed that structure and the trade failed. And yeah, look what we could have taken. Now, I wouldn't have taken this because, we did just grab this high. So we're moving upwards now. But technically, if I had a bias to the downside, this is a rejection. This is a entry right here. And you can target the liquidity for a 1-to-1. You can target to a 1-to-2 if you think it's going to hit there. Since we're in such a bullish move, I don't really feel comfortable with that. But you just got to realize with whatever you target, it needs to be consistent. This wouldn't be a good enough risk to reward for me to target a move downwards because I need at least a 1-to-2 potential. And preferably, I want more of a potential so I have a higher certainty that the trade's going to work out. So if I have a take profit, for example, let's say I entered this trade right now, okay? And this was part of my strategy. I enter here. I'm like, okay, well, price isn't going to come below here. And then I enter a trade and I assume it's going to come up to here. This has a 4.81 potential. Then I can identify the most likely zones. So I know that price is most likely going to come to here. I know the second place price is going to most likely come is to right here. All right. And then my last final zone that I would want to see is up here. Okay. And the why? These are areas where I can see that it's been unretested, where there's been a huge sell-off. We've seen a sell-off, it's been unretested until to here. We've seen a sell-off, it's been unretested till to here. Everything else has been tested. You can see where the sell-off occurred, where we broke that low, it tested back up into it. And then there's just liquidity above here. So price could do one of two things. Like you could, if you really, really wanted to, if this was your trading setup, right? If I had a high potential that it's going to move up to here, right? To this area, then I might take a 1-to-2 trade expecting, hey, it's going to move all the way up to here, but there's a higher potential that it's going to move just to this 1-to-2, right? And not necessarily, I'm not saying this is part of my actual strategy, but I'm saying that's the concept is that if going back to this trade I had earlier, right? That I was thinking about earlier. you know, I had this high potential from where my entry was. You know, I was like, okay, well, in my ideal zone where I think it could go to, it's giving me a 1 to 4. So I'm risking $100 to get $400. That's type of idea. So I know, okay, well, since it's 1 to 4, what's the odds of this hitting at least 50% of that 1 to 4? So a 1 to 2. And I look at my structure and I'm like, oh, well, look where a 1 to 2 occurs. Well, 1 to 2 still occurs within the market structure that's giving me. So we look at this, right? High, low. So technically, if we're following this, a 1 to 2 still occurs within this high and this low, right? Because if I exit out, our expectation, our desire for the, you know, best type of trade is at a 1 to 4. Well, then a 1 to 2 right here is still within this structure, and I can almost guarantee with like 80% certainty this one would hit compared to a lower likelihood that this one's going to hit, right? So that's why I like to look for those way bigger trades. Oh, look at this. So we had an idea, okay, well, we thought price was going to come up to a 1 to 2, right? So maybe from that entry I looked at a second ago, right? Coming up to this structure right here, well, maybe we don't target that 1 to 2, 1 to 3. Maybe we just target a 1 to 1.5, which is half of that. Okay, so our expected area where price goes to, or where we want price to go to, especially on the higher time frame, I can half that and have a way higher win rate, and that half should be something that's still a decent win rate. And if I'm risking $100 to get $200, I only need a 40% win rate to be profitable. As long as I don't switch those values around. So as long as I don't change how much I'm risking. But hopefully that makes sense. So like it's all about just playing the game percentages, right? Where can I increase my odds to win a trade? And I don't have to be right every time, but where can I find the highest odds? So the highest odds are always going to be found towards the top of a structure. So these are where and this is probably the best thing I'm going to show you out of everything I've said. We have structure, right? Where are the highest odds in structure? We have A up here on the discounted structure, right? And let's say this price overall is moving down. Okay, so we're moving down generally. So you have A at somewhere near the discounted structure. You have B when price is already making that move from the discounted structure, moving down. You can see those continuation trades. Okay, so then we have trades where we're taking them. They're smaller ones. We have this move already continuing down. So now we're taking these small little trade moves down. Okay. And these give you the best likelihood because you have an overall higher time frame target of here, and you're going to take these little trades after it gave us confirmation, maybe grabbing some liquidity. Realistically, it's not going to look like that. It's going to look like this, right? It's going to fake you out once, fake you out twice, maybe even fake you out 3 times, and then move down, okay? So once it gives you that, then you can, the confirmation after maybe 1 fake out or 2 fake outs, and you get that sell off, then you can start taking these little trades down here, okay? So that's 2 entries you could get. So you have one where you take a general trade and you target the low. Okay, and generally that's going to be around a 1 to 2, 1 to 3 risk reward. Then you can have another trade where you look for these fake outs to form. You want to see at least 1 fake out where those liquidities taken inside structure while still holding the high, okay? So we have this high. You want to see these fake outs form somewhere in that discount zone and then break the low of that structure that's occurring inside of it, okay? So we break that low, and then you can take these little trades that are forming right here. all the way down to the bottom, okay? The final entry is once we do break below that bottom, okay, it might give you something like this, where it gives you a minor retest and then a failure. And in that case, you want to see some sort of structure like this. So you want to see on this minor retest, you want to see an instant second tap and then a failure. And that's another really good entry. You don't want to see it do something like this, showing it a stronger lower move, giving a small retest and then failing, and then showing strength back above, because most likely that's going to take out that high, okay? So I can give you a few examples of this as well. Okay. So we have an example right here. I have no clue. I know people use trend lines, and I'm not against trend lines. I think trend lines can work. I just think following market structure is a lot better of a plan. I think being able to do this, have an idea of what market structure is going to be successful longer term and help you read the market longer term. So if I know that we scroll out right here, we have this high, low, and we never actually really retested this high, low until right here. Okay. I know where discount is right here. We hit discount. And then I scroll in further. Let's go in further. And I can track these. How you mark those levels you were telling me. Oh, how do I mark them? Yeah, I'll show you some examples. And you can always go back and watch the stream. Like, that's why I'm not playing any music, so it doesn't get copyrighted right now. But let me give you a good example of this, okay? So do you remember what I was... Yeah. I would highly recommend going back and watch, because it'll make a lot more sense. And you can save the points, kind of give yourself your own timestamps of where I actually said something that mattered, where I was actually saying something. But let me give you... Is that the entry? Wait. Yeah. Okay, so these levels... So we have this one. So in this market structure, we have important levels, okay? Yeah. And if we're looking at it in terms of high, you want to enter it. Have you ever heard the saying, enter with the trend, right? Well, either A, you want to enter with the higher time frame trend. So let's say this is the higher time frame. So whatever your higher time frame is, okay? This is the higher time frame trend. And everything that's occurring... Oh, sorry, my throat's killing me. This will probably have to be the last thing for right now, and I might need to go to bed. Sorry. But I'll give you this whole explanation. So we have everything that is in the higher time frame. Where's my drawing? I always forget what my drawing is. Oh, it's right here. So we have everything that occurs in this higher time frame, okay? Right there. All right. Now, everything that's in that higher time frame, so this is technically our lower low, and this is technically our previous high, okay? So previous high, previous low. Since we're moving downwards, right? Where would I want trades? Now, if we see prices moving upwards and some sort of strong move or some sort of pattern move, we're not going to take a trade, because our higher time frame is telling us we're moving downwards, okay? So we're looking at the discounted area right here. We're looking at when this confirms. So when it shows us something like this, let's say it moves up, it gives us one fake out, second fake out, and we close lower. That's a minor structure that's similar to this, right? So now we created a low. You can wait for a retest and a failure. That's another entry right here. Entry right there. Or maybe it does the same thing. Let me go ahead and delete that. Let's say it does the same thing. Well, it fakes us out one more time, and then it creates a new low. Sometimes it'll give you my type of setup, which is that gap I'm showing you, or you can wait for a similar setup where you wait for a retest and a failure again. So that failure is going to be in that discounted zone. Again, somewhere in this discounted zone right here, right? And then you take a failure. And this change of structure, this is what I call a change of structure, is telling us that price has a likelihood that it's going to move back to this higher time frame low down here, okay? So now we've already identified not only maybe we want to enter based off the higher time frame, we have one trade potential right here. We have two trade potential right here, or we have three trade potential on a break and retest and a failure, okay? And usually those will be signified by something like this, like shown by something like this, where you have a one candle and a way stronger candle that's in favor of that trend, whatever the move is looking like, right? So in this case, this is a red candle right here. This is a green candle right here. And it will be near some sort of structure. And I'll show you some examples in 1 second. Then we have one other final entry that I would be looking for right here. So then we have this move down here. Then we have a retest. We have that failure. And then we have another retest. So remember that gap that I showed you? Let's say a gap forms right here. And these are what's known as kind of those fake inverse fair value gaps. We hold within this gap. So this high holds within this gap and shows us that bearish engulfing candle. That could be one entry, like I was showing you earlier. Where maybe we have something like this, okay? And then you can wait. You want to see an instant close below structure, and you want to see an instant rejection back up. And that could be another entry following with the higher time frame trend. And the only things you don't want to look for is I don't want to look for fake outs that occur under. Sorry, let me delete all this. I don't want to look for fake outs that occur with under here, anywhere under here, because they're not going to be sustained by a longer time frame move, and it's not giving me the odds I need. And I don't want to look for a continuation when I'm at the top of this move. I want to see some sort of break and retest pattern form, or my inverse fair value gap to form up here. Because I want to wait for that confirmation that we're breaking. I don't want to go ahead and enter expecting that price is going to move lower when we're still making higher highs, right? We're still making these and we break up. Here's an example of that. We didn't show this confirmation. You know, we were breaking up. We had a higher high. We retested. We held. We retested. We held again to some degree. Until we broke above this previous high right here on the higher time frame. So it never gave us an entry. We retested, and then we broke above the high. So if I'm looking at a discounted area now, okay, well, we're not going to have a trade for probably another hour. But now what I'm looking for, we reversed our direction. Okay. If I'm looking for a trade, I'm looking for somewhere in this discounted zone. Again, that's anywhere below 50% of the structure. Okay. Somewhere within this discounted zone. B, some sort of structure where it might be able to hold, which we do have right here. It could potentially bounce off this, okay? And then once it bounces off this, we want to see a change of structure. So we want to see something like this. Hold, break, and then break above, okay? So that's one option. It could do something like this. It's already bounced to here. It could do this move. That's one. It can do something else. It could fail right here and break back down to somewhere in our discounted zone, okay? And then we might see an entry in this discounted zone, and we have a lot of structure right here to show for it. And then we might continue up. And our expectation, again, is we're going to continue this higher time frame trend that we've been showing all day since 6 o'clock, since open of the day, continuing this move all the way up. And that's what our hope is, that we're going to continue this move to make a further move, not only here, but to here, to here. Okay. And so we're stacking all those odds in our favor. Okay. All that potential in our favor, with the higher likelihood trade of giving us at least a 1 to 2 is going to be occurring down here, while it's not out of the realm of possibility for a setup to occur here, especially in stronger moves. So for example, if we're in a very, very, very strong trend, it might not always come to the discount zone because we're not in a pattern market. We're showing a lot of strength. So it could always just come to these small retests and continue up. Within this market, I would assume that it's going to come all the way somewhere down into this previous structure and continue up. But that's just me. Hopefully that explanation helps. I do need to probably get off. If you have any other questions, ask. My throat's killing me. I really hope I'm not sick. And it's just allergies or something, but I think it's the latter. But that's what you're supposed to do. This is only one aspect of trading. The more important aspect of trading is consistency. So once you develop some sort of strategy, that doesn't have to be my strategy with the inverse fair value gap. You know, it could be something where you look for these higher time frames, right? I just look at these higher time frames, and if I see, I look for a liquidity grab, and I look for a bearish engulfing candle, and I just take a 1 to 2 from that bearish engulfing candle, and I look for a very, very small scalp back into the general trend that was showing, and that might be my strategy. But the main thing when you're creating a strategy, I just highly recommend. Yeah, I don't know how much I'll be able to respond. I'm probably going to send a bunch of photos. I'm not on there a lot, and again, my school, but I'll definitely respond to you and give you a few suggestions. It's probably easier to look back at the streams. But in terms of you're asking for specific trades at specific times, I probably won't provide answers on that just because it's financial advice and I can get sued in my country. Sadly. Even if I'm just a small streamer, I can't get sued. I've seen it from someone else. So, but I will, what I mean by financial, like if you're asking me for a specific trade to tell me buy or sell those things, I don't really recommend doing that because people can get in trouble. But I will, what I will do is I definitely will give you advice, and I'll give you. No, I'm just very cautious on it. But I do see the YouTube videos where people do it and they say it's not financial advice, even though that doesn't hold up in court in the US. But I think it's more of just my own safety. But I will give you trade setups, trade examples, things like that. And I'll respond to you. But I hope everything I've said, I mean, there's not much more to my strategy. A lot of it is just looking at the higher time frame and looking for a clean setup. A very clean setup. I don't sell any courses. I won't ever sell any courses or anything like that either. But yeah, I'll send you, I have a bunch of screenshots of previous trades I've taken, and I'll let you analyze them. I'll just post them in bulk for you. Or I'll save them. I don't know if I could post a file on TikTok. You want me to create a YouTube short where it's just the slideshows of past trades? Would that help out more? Like my past 20 trades? Instead of having to go through, I don't know. Let me see if you could send attachments on TikTok before I do anything. I think you can. I might be crazy, but I think you can. No problem. Oh, wait. Oh, no. No setup. I was about to say. Yeah, I can make it short with all the slides. I might be better. I'll just title it all my previous trades that I have screenshots of. All right, I'm going to go ahead and get off. Hopefully that was helpful. You can always rewatch this. You can rewatch any of my past old streams. You could see where I make mistakes. You could see where I do it. You'll see most of my mistakes is the higher time frame or oversizing. I'll go ahead and mention that to you. For example, we're showing weakness right now. If I was actually predicting this, I would predict with pretty good certainty that price will come down to here, with less likely certainty that price will come down to here. And so if I was taking a trade or if I was looking for a specific setup, right? Oh, well, price will come down to here most likely. Maybe I can look for a setup somewhere up here. I can look for some sort of, retest back up to here and a failure. And this might be your setup for your trade right here. Something like that. That could be a setup that's valid for 1 to 2. There's also the potential of where the trade just ignores that, comes up, grabs this liquidity, and gives you the other setup. And then your entry is going to be up here with wherever the stop loss is for my inverse fair value gap, again targeting this line. All right, I'll let you go ahead and go. Sorry. I will talk with you again later. Oh, perfect. Let me respond. Let me make sure it gives the option. I think, yeah, I can send attachments for you. Wally DeJazz. There you go. I followed you. I think once you approve it, I think I can message you. You said you sent a message? Sorry. Let me actually get off. Oh, you did. Okay, cool. Perfect. There you go. Gotcha. And I can send attachments. So let me go ahead and I'll go ahead and send you some attachments of the trades for you. Okay. Right after I end this. I'll give you the trade setup, the basic rules of the strategy, and then I just want you to modify it for yourself. It works with just the higher time frame and the general strategy setup, okay? But modify it to work for you, your risk to reward, everything else. Your take profit levels. Yeah. I just do a 1 to 2 because it's easy. I can set it there. I look at it for about my average trade time's 2 to 3 minutes, and then I'm done. If it wins, it wins. If it loses, it loses. I'm going to actually take a risk at this one, I think. I'm going to take a chop at this one. But probably not on stream. I'm going to wait for a better setup while I'm sending you the screenshots. All right, see you later.